Assalamualaikum and a very good morning to Madam Nabila. So today I will present about Islamic insurance or Takaful. Takaful is a type of insurance based on Sharia principles or based on Islamic banking transaction which is muamalat by observing the rules and regulations of Islamic law. Takaful is Arabic for joint assurance. A Takaful contract is founded on the idea of absolute good faith which requires you to disclose all relevant facts. As a consequence of a measurable loss, you can only recover your cash loss and net profit. A policyholder must make a monetary contribution to a shared Takaful fund in the form of a participatory contribution known as tabarruk. A contract must be signed in order to become a participant by promising to mutually assist to each other through losses. One distinguishing element of a takaful is the distribution of the fund's excess among policyholders and the takaful operation based on a predetermined ratio. An Islamic insurance firm does business cooperatively in line with and according to the Islamic Sharia norm. All conventional insurance businesses tasks such as underwriting, claims, reinsurance, marketing, investment and company management shall completely adhere to the Islamic Sharia code for all Islamic insurance firms. Simultaneously, Islamic insurance businesses should make available the extent and advantages of insurance coverage usually given by conventional organizations. Islamic insurance businesses provide broad capabilities for transacting all types of general insurance including life, marine, fire, automobile or motor, accident, aviation, engineering and others. There are several licensed takaful operators in Malaysia which are Syarikat Takaful Malaysia Berhad, Takaful Ikhlas Sendirian Berhad, Prudential BSN Takaful Berhad, HSBC Amanah Takaful Sendirian Berhad, Etika Takaful Berhad, AIA Public Takaful Berhad and also Great Eastern Takaful Berhad.
First, we talk about types of Islamic insurance, also known as takaful. Takaful contracts, an alternative to conventional insurance, are available to cover many of the same things as insurance policies. The coverage is typically divided into two types, which are general takaful and family takaful. Okay, first we talk about general takaful. General takaful is a short-term insurance that typically lasts 1 year. It protects properties against any loss or damage. Property loss or damage, liability for damage caused by a policyholder to a third party, and accidental death or injury to a third party are among the risks covered. The main products are motor vehicle, fire, house owner, householder, personal accident, medical and health, child education takaful plan, and marine, aviation and transit. It is a one-time contribution payment. Under this type of takaful, the policyholders of a general takaful scheme enter into a contract with the company based on the mudarabah principle, as stated in the policy's partnership clause. This clause specifies the participants and the company's right and obligation. The company collects takaful contribution from participants and manages the various classes of general takaful fund as an entrepreneur. The amount of the premium to be paid by an Islamic insurance company's policyholder depend on the type of takaful and the rate set on the basis of sound rate-making principles. The premium will be paid to an Islamic insurance company known as tabarruk by the participants. These takaful contributions are credited to the company's general takaful fund. The funds will be invested by the company in accordance with Sharia requirement. All profits from the investment will be returned to the fund. The company shall pay compensation or indemnity from the general takaful fund to fellow participants who have suffered a defined loss caused by one or more of the insured perils during the policy period. The general takaful business operational costs and required reinsurance premium will be covered by this fund. This fund will also be used to create a reserve for unusual losses. If there is a surplus or profit after meeting all of these expenses and the required reserve, it will be split between the participants and the company. Participants who have suffered losses, on the other hand, should not share in the profits because they have already been compensated out of this fund. The surplus will be divided in accordance with the mudarabah principle. Next, we talk about family takaful. So, family takaful offers benefits similar to life insurance. Family takaful plans have a set duration and help protect you and your family from risks such as death or illness. Family Takaful offers both protection and long-term savings. Contributions to Family Takaful plan are divided into two accounts, which are a personal account where funds are invested in Sharia-compliant investment to grow savings, and a donation to help cover Takaful group loss. If you or your beneficiary suffer a tragedy, you will be compensated financially. Simultaneously, you will benefit from long-term personal savings because a portion of your contribution will be deposited in a saving account. You will be able to enjoy investment returns from the savings portion based on a predetermined ratio. As with life insurance, you will be eligible for personal tax relief if you participate in Family Takaful. Okay, now we talk about comparison between conventional insurance and Takaful. Both insurance have similarities and also dissimilarities. Okay, for similarities. First, both types of insurance require payment from the insured to the insurer. In conventional insurance, this is referred to as a premium, whereas in Takaful, it is referred to as contribution in the form of donation. And when certain events occur, the insured amount is repaid to the insurer. The last one, both insurance policies contain a significant investment or saving component. And how about the difference? Okay, for Takaful, risks are shared among participants under a mutual guarantee scheme or Takaful scheme works. While for conventional, risk transfer mechanism by which an organization can exchange its uncertainty for certainty.
Did you know what is the purpose of Islamic insurance or Takaful? So, Takaful insurance companies were introduced as an alternative to commercial insurance companies, which are thought to violate Islamic restrictions on riba, which is interest, al-maisir, gambling, and al-gharar, which is uncertainty principles, all of which are forbidden under Sharia. Islam does not condemn the fundamental concept of insurance, which is to protect oneself from potential loss or, in other words, to manage one's risk. Indeed, Islam encourages people to help one another when they are in need. This is a Sharia-compliant concept. Firstly, gharar exists because the insurance policyholder is unsure what he or she is buying or paying for if no loss occurs and the policyholder receives nothing. However, when a loss occurs, gharar returns due to the uncertainty in the compensation amounts, which vary. Next, the element of maisir exists because the payment of the sum insured is entirely dependent on chance. When funds are invested in interest-bearing securities, the third element of riba is introduced. Takaful is an alternative to traditional insurance that presents itself as a form of mutual aid in furthering good by assisting others in need or in difficulty. The concept of tabarruk eliminates gharar and maisir. In practice, there are several takaful models. One of the models, the mudarabah model, divides participant contributions into two parts, one for tabarruk, which is used to cover policyholder losses, and the other for investment. Next, we move to the importance of Islamic insurance or takaful. According to research published in the International Journal of Advanced Research in Economics and Finance, the takaful business benefits Malaysia's economic growth and development. Savings, investment, and income are the three primary indicators of economic growth. Takaful benefits in providing peace of mind to individuals as compensation and outstanding liabilities will be recovered upon untimely death or total disability. It covers the security of inheriting properties by the dependents or heirs. Moreover, takaful is free of liability by the guarantor on any outstanding credit facility or financing or loan. Takaful also provides for share profit or surplus of operations based on the profit sharing principle of Al-Mudarabah.
Insurance carriers operating models including policy, insurance and service, product pricing and underwriting, distribution, claims and other support functions will be far less labor intensive in the future, resembling more modern tech companies and differing from traditional insurance for two main reasons, which is product simplification and product portfolio simplification.
Investment planning is the process of aligning our financial goals with investment resources. It is the main component of financial planning which put to use our savings and ensure us earn more money through investment. The purpose of investment planning is people make an investment to make money in order to improve our welfare, for financial security, to have funds for emergencies, to reach financial goals and for a secure retirement. Investment planning also important to us because it can define our goals and objectives. Besides that, it also gives us direction in finance. Then, it can help us to determine the investment strategy that best suit the financial goals. It also helps to review the investment strategies and monitor how well the investment portfolios are doing. Lastly, investment planning will protect the future in the short term or long term, or we can call it as a financial security.
The current issues of investment planning: first, rising inflation. Since COVID-19 pandemic attacked all countries, about 85% of investors in Malaysia have spent more time considering their financial welfare and rearrange their personal finance. It is because many people were laid off from their current job and suffer from an income shortfall. According to economics, the rate of inflation can be defined as a continuous increase in price of goods and services, resulting in a decrease in the purchasing power of a currency. Recently, in Malaysia in December 2021, many people began to voice the government's concern about the increasing price for various goods sold in the market. Next, create and maintain an emergency fund. Most wise investors put enough money in savings products to cover emergencies, such as sudden unemployment. Some of them make sure they have up to 6 months of their income in storage, so they will know it really be there for them when they need it. Other than that, consider dollar cost average. Through an investment strategy known as dollar cost average, you can protect yourself from the risk of investing all of your money at the wrong time. Individuals who typically make lump sum contribution to individual retirement accounts, either at the end of the calendar year or in early April, may want to consider average dollar cost as an investment strategy, especially in volatile markets. Lastly, pay off high-interest credit card debt. There is no investment strategy anyway that pay off as well as or with less risk than just paying off all the high-interest debt you may have. If you owe a credit card with high interest, the smartest thing you can do under any market condition is to pay off the balance in full as soon as possible.